Everybody, this is DayTraderRockStar, and this is the high probability watch list for the week of, again, I just came back from vacation, so we're going into the last week of July. I just arrived today back in New York. It's Saturday night. I wanted to run over to the office and get some research started because I didn't watch the markets too much this past week. I was on a family vacation. And, I pretty much tried to dedicate my time to that. So I didn't do any research while I was away. I checked in once a day, just checking on portfolio movement and stuff. But overall, I didn't get to that. So today I wanted to get our head start on it and maybe even get something out. And then I'll finish up tomorrow with a part 2 of the HPS video. Right now, first thing I'm noticing right now is that big divergence that's playing out, sell side divergence. That's kind of significant in this market. It's a really good one. And this is sometimes when you live and die by a divergence setup, you really want that to play out right. Yet you might be net long and you really want the market to kind of defeat that and move higher. So it becomes a little tug of war right there in your inner, the guy on the right side of your shoulder and the guy on the left shoulder. All right. So I can't help but not notice this signal. This is a pretty decent divergence. You can see the steepness of the first peak down to the second peak, and a definitely higher high on the price. Even though it did not break under the 80 line, which I would really call a pure divergence. Pure divergences are really, I think, really the best. So it's not a pure divergence. We also had a big candlestick engulfing pattern. We traded higher than the previous candle's body and traded lower and closed lower than the previous body. And that was an obvious big reversal right there. So there's a lot of things here pointing to the market to pull back. And like I said, I was kind of predicting that the market would take out the highs before correcting. So I don't know, I'm not fully buying into this divergence just because I think it's, the divergence is it's perfectly timed right up here, but it's underneath the recent highs, and lots of times we like to push those levels and trap people in before it reverses. So I want to watch this level closely, make a decision probably on Monday how we want to feel this out. Tech has taken a big pullback, and from what I heard on the news, following the news, it was Facebook getting slaughtered, Twitter getting slaughtered. So the big FANG stocks are weighing on the market, especially on the NASDAQ. And then Sunday we did have some selling here. So, going into this week, I'm glad to be back. I want to start doing my research right now. Another thing I could tell you on my scans, I do kinds of pattern scans when I do more watch list. And, especially divergences. I haven't even gotten to that yet. I'm going to do them, bring them to you right now. But I do see that I have an automatic scan going for looking for bearish engulfing candles. And it's the most I've ever found, but it's obvious because the market here really gave us that engulfing pattern. So, it makes sense that a lot of the S&P component stocks will also be giving you the same candles. So I'm taking that with a grain of salt. But the divergence is right now the biggest thing that's standing out for me. And even though it's not under the 80, I'd watch it carefully. I haven't acted on it yet, taken a short, or we're going to predict that divergence to come down to. I want to give it a couple days, see if it's fake and bake. There was actually some good economic news on Friday. I think the growth was skyrocketing and stuff. So there's a lot of positives going forward. So that's, I keep on putting that. That's my argument. I think the market continues to feed that, and the market really knows the true value of the economy. And this might be a technical move, but overall, I think we're going to continue to grind higher here. So I'm still calling for that break of the highs, but we'll see what this divergence turns out to be. All right, so let's start looking at some stocks. All right, start off looking back at the HPS watch list for last week, going into the vacation, and it was some conservative picks on there. There was one big tech that I'm in, the Coop, the Aflac looks set up, the LUV looks set up, Rubbermaid and Tupperware. I did like them; they're not working. We're going to talk about those in a second, and everything else as you can see. So basically, we still have Coop still actively in a watching state, even though I am in it. And the same thing with Rubbermaid and Tupperware, which have buy triggers above the important candle where you could buy with confidence of it moving higher. I'm in it earlier, so I'm actually not benefited from that alert that's keeping me out of there. So Affleck, I do believe that just recently hit. Let's just review what type of chart that is. Remember, everything that ends up on the high probability watch list fits a pretty strict criteria that you'll notice time and time again why it's on there. And this was a textbook, basically a textbook divergence in Affleck. It was so obvious, and it was the best divergence I've seen in a long time. Trying to get the whole chart on here for you. I'm just trying to. Good enough. You just don't see the name of it. It's AFL. Affleck, like the duck. All right. So you can see the two-stage divergence there. When I say two-stage divergence, when we're talking about a buy-side divergence or, a bounce off of a pullback, we have the first low, the bounce, and the second low and the bounce. So the first bounce is stage 1, the second bounce is stage 2. Stage 2 is where we place our stop, and that stage 2 also is part of the combination that makes a divergence. You have to have a lower low and a higher low in the stochastics. And the stochastic higher low, preferably above 20. So this was a textbook, cleanest divergence I've seen in a long time. All right, so let's take a look. And look at that. That thing just took off. Come on, give me a friggin' break. That thing is really, I'm not even in it. But look at how that thing just rocketed up. Oh my God. I'm sure there was some news out on this too, but it was already started heading in the right direction before news hit it. Pretty much almost hit its target before news anyway. And then we had some follow through. But what a great example of divergence, worth printing out and putting it up there, put it on the wall. All right. All right. Next one is Coop. Now Coop is active. It is active. It has not hit its buy trigger yet. And let's take a look here, because I know it did pull back. I'm surprised it hasn't hit that level. Let me double check this, make sure everything's. No, it hasn't hit the level yet. We got very close to it. Wow, we got very close to it. But you know what? I'm very bullish on this. I own it. It actually held up good in this tech beating that happened the last couple of days, the last week. So this is actually looking very bullish. And I would continue to think that this might be actually one of the best bets going into next week, just seeing how it held up so well into that tech disaster. All right, so that continues to be active. And I don't even know if we're going to get this buy trigger down here. I would actually move this buy trigger, and then instead of a buy zone, to 65, 65.90. It's fine. 65.90, and I think you're going right to your target, probably higher. I might change that, I might not. Just remember I said it, write it down. I'll want to take a note on it, so I'll talk about it tomorrow. If I can get my pens. Let me see. Here it is. So let's say we're going to change this Coop to 60. I'll just make a couple. We'll make it even here. Maybe it was 60. Make it 66. Make it real safe. 66.50. That makes it real safe. And you're definitely moving higher. But anywhere, I would say that candlestick, you could probably squeeze it in a little. Even if you see positive, this seems to be a nice candle that we're holding. I actually like this, so I would, I might even trigger this Monday and just say it should be triggered now. I could automatically trigger it, send in a buy alert out on it. I might do that on Monday. We'll see how it opens up. All right, that was Coop, and then LUV hit its target, and that was a straight up, it was almost an inverted head and shoulders pattern. It had a nice upward move, and it was kind of a wedge pattern. Nice candles holding up. I liked the flag. The buy trigger was a breakout of the flag, and a little bit different, not a divergence setup, even though I think the airlines did give us a divergence back here. So this was a follow through after that big divergence we seen. And a couple weeks ago we called those divergences in the airlines. So this was actually the first divergence, and I was surprised it came back. It didn't take out the lows. So really, if you put that stop under that divergence low, in that second stage of that divergence, you would still be in this. You held this as a swing trade, and now look where it is now. Yeah. So it did push up, hit our profit zone, chopped around, and then I guess earnings came out on a couple of these things and just it rocked up. But it did hit it, within its time frame. Within 3 days, it hit its target from being issued. And then it pulled back, and then it rocketed back up. And remember, when you get those alerts, when it does hit that level, that alert of sell, a profit zone, you get that email sent right out, and you also get a text messages if you want them. All right, so this is the interesting one, the Rubbermaid. I was smelling bottom on this really a lot. I still am on Rubbermaid. This is my favorite as of cheapy, and technically I'm not really, like these cheap stocks. And when I say cheap stocks under $40, especially down in the 20s, I always tend to have trouble with them. So this is a kind of a gut play for me. There's no divergence. I'm feeling the strength come back into this. I'm seeing the base. I'm feeling pretty good on this. And you can see it never got through our buy trigger. It just kind of pulled back. It's holding off the stop. It hasn't activated yet. So basically, I would still continue to look at this buy trigger as being a good breakout area of this base. And if we get through that, then game on this one. But it hasn't hit that level yet. And now Tupperware, I picked up a little Tupperware. I started my position on these a little bit early, just a quarter position usually. And this pulled back, so we like that pullback. So we got in, and as you can see, it didn't. Apparently, some news came out on earnings, and it got hit. So you can see it gap down here. It has not hit its buy trigger yet. That's why it said it's watching, but it doesn't do you good if you're in it either way. So we'll see if this starts to rotate back up. We usually look for a 5 to 7 day reversal on this, and for it to push back into the channel, and then maintain that channel and start moving back up. But I have a feeling that we are going to do that. It's a good place to cost average in. I think Newell's a better bet at this point right now, because it's not showing that smackdown weakness. And if this starts to move up, there's a good chance that other one's going to move up too. But they're both in play still. SWK, I think we've went over this one. I don't want to be reviewing these stocks anyway, because I like getting this in this one. We recently took it off, but I just wanted to see what's gone. Oh, yeah, look at this thing, continues to push higher. And again, even if we show you something that's already taken out as targets, and you're saying, well, the important thing is looking back and what got it to that point, and going back and showing you the important levels on the chart like this, where you can learn going forward. The February low here. Look at this perfect divergence. This was a textbook divergence with a huge reversal candle and a beautiful run. Now, divergence, again, I'll just throw you out that little, tidbit of information on what a divergence means. It means it's going to make a very more aggressive move than the average move in the direction of the divergence. So this is a buy-side divergence, so you're going to move up. If it was a sell-side divergence, you're going to move more down. And usually, if there is a channel that's defined inside that divergence inside that channel will break out 90% of the time. So you can always set your target outside the channel line, which is just a fantastic. Here you can see there's all examples. There was a small little channel here. I don't care what it is, a big channel, small channel. It's going to break out further than the average. The small little chop here, 2 points up, 3 points down, 2 points up, 3 points, and staying real tight. A divergence will give you that bigger move outside the channel, even though I can't draw my channel lines there. Just picture these highs connecting a trend line and these lows connecting a trend line. So the same thing here. Really tight channel, real tight channel breakout. And then you just, again, the other golden rule is, just like you got in, you don't want to test the stochastics. They're really accurate on these stocks. And you can see when you get overbought, you got selling coming back in. So don't think you're on the best position ever, and it's going to continue to move higher. even though divergences are great bottoming plays. It's just, that's the game you have to play. You have to decide if you're going to play that game or you're going to be a gambler. All right. Another thing I like to do is just randomly go back. Like I'm going down the line here. I'm back to Citigroup here. And even though they have hit their targets, I like to go back and check them out because I know the charts that I wrote up on the HPS stocks are usually really, really good and detailed charts. And I like to refer back to them to see if we have retracements or anything. So this was a Citigroup. And again, educational purposes, what this finds one of the best setups is a divergence. So that's what my highest criteria is. If we get a divergence, you're on this list because they work. All right, show me a divergence, and I'll show you a stock moving in the direction that we want to be in. Unless there's news, something else that kind of affects the out thing, the odds are so much in your favor. This is better than anything out there. Boom. Divergence, big channel, breakout of the channel. That's what you get with the HPS. Anyway, a little plug there for the HPS for members. If people get this and they're not members, that's what you get every week. So I'm in the process of building out that list right now, but reviewing some of the last week's stocks and also reviewing past HPSs. Like I said, I want to see if there's any retracements, things that are interesting right now. But we're going to move on to some regular stocks, and I want to do some scans, and I'll stop in again. Well, I'll unpause it when I have my next stock to show you. All right, going into this week, I just did a nice scan. I have a lot of stocks here. I'm going to go through each one, decide which one makes it to the watch list, but they're all pretty good. So even if they don't make it to the watch list, it don't mean they can't be traded. JBHT is registered as a divergence. I like how it's holding the 200-period moving average. Huge candle over here, probably earnings, something that chopped around and dropped off and then continued to chop around. It's back down to the 200-period moving average. But you can see definitely a little divergence happening here. You have a low here that spiked way under that 20 line, and we kind of drifted down, and we're trying to hold that 20 line to turn back up. So it's an interesting that it's starting to come up and register as a divergence both on the 9.3 and the 14.3. Now I have both here just to kind of back test and look at how a stock reacts to a divergence in the history of its chart. And we could go back here and look at that 14.3 divergence here, and that was a great level. Had a nice run over a 2-month run. It was basically perfect. And also gave you a 9.3 one there also. And then there was another 9.3 divergence here, and that was perfect right there. That was perfect for 5 to 7 day run, and that's what we're looking for. Our ultimate trades are a divergence trade in 5 to 7 days, and moving on to the next divergence trade. Now, if I go back further, you'll see that the 9.3 is going to be more active because it's more volatile. It's going to give you more bounces and stuff. So we're going to have more of those divergences. But the divergences are actually perfect for this. Here we had a divergence, really called the low on this, and then if we zoom in here, this one looks like the only one that really didn't work out too well. It dropped out on that. I don't know if there was news, but it was a 9.3, and everything else here worked okay. So I like the combination. The 9.3-14 worked out really well. It was a 9.3 in a 14 period, 9.3 in a 14 period, and that's what we're starting right now. So a 9.3 in a 14 period, dual stochastic, decent candle, 200 period moving average. Everything goes along with it. You could probably watch it over the next couple days. It's it looks pretty good. I mean, honestly, it's not an exciting stock, but at $118, it's definitely going to be a mover. So it's not bad. I like it. So we're going to watch it closely. Maybe end up being, definitely has an opportunity because it's multiple indicators, 200 period moving average, candlesticks, divergences, dual divergences. Definitely could be on there if it needs to be. Funko. I wrote this one down. I think Racer brought it up to me in the room. And it's holding that 20 period moving average really well. It does look good. Funko. I forget what they do. Some kind of maybe an app or something. Anyway, up and coming technology, $16 a share. Keep an eye on it. I went over to Coop, but I do think Coop is hanging in there pretty good, considering how a lot of the NASDAQ got beat up pretty bad. So we're going to continue to keep that on top of the list. Not making it to the, a little too volatile to make it to the HPS. No real divergence. Now, a couple of these are no longer in play, but I wanted to bring them up and show you. The last time we looked at this, Budweiser was a perfect textbook big divergence here. And you can see, right before June, what we're doing is seeing a visual divergence. Really a steep line between the low and the higher low, and definitely a low and a lower low on the price. Plus the little island reversal. It's a candle where you have a gap down and then a gap up. And that's another pretty decent technical candle. We don't cover it a lot, but when you have that gap up and it leaves it like an island, it becomes a very big reversal point. In this case, this is a sell divergence, or a sell island, and you can see it actually pulled back. But I just wanted to show you another divergence. Nothing active on that right now. Here's a possible short. You have a reversal candle. You have a follow-through day. I'm still having a hard time, really believing the pullback is going to be anything that substantial. So I'm kind of cautiously bullish, and I want to point out that, if this market does pull back, and you think it's going to pull back, these are just some I would recommend. A stop above Costco's recent high. Definitely could rotate back down. It's way off to 20. In some cases, that could be a great sign of strength also. So I'm not, I'm not advocating a short in here. I just like that reversal candle and something you could work with. Darden Restaurants. This is what we call a 2020 flag. It's a fast rotation back under the 20 line, and the price holds the 20-period moving average. Now, even though we broke down a little through the 20, if it's within the candlestick range of the 20, I consider that a very a good level. So this is really holding that 20 well, and we already got oversold quickly. So I think this is very bullish. It's not a divergence, but it's another technique. It's what we call an HPS playbook play, and you can see that on the forum, and it describes how you look for. You could easily do a scan. You could set up your charts to scan prices that are holding above the 20-period moving average, yet the stochastics are rotated back under 20. And that's what we call a 2020 flag. It's a nice pullback, usually just a continuation pattern and a move higher. So that's on the radar. If you want to take that, I don't see myself taking that. FSLR gap down. It didn't even stutter step. FSLR, and didn't turn over. It didn't a big reversal candle. I would watch for a big reversal on this and to continue to move higher for solar. Just based off of the, the earnings came out, good candle close. It didn't roll over at all. I think we probably gap and go here, gap down and just head right back up. It was a nice consolidation. I would consider actually trading this one, and I think I'm going to write it down. And I think I'm going to take options on this. I'll look at those after. All right. Far enough out that if it doesn't start moving tomorrow, the next day, I think that for this to really play out like I want it to play out, I think we just continue to move higher. It doesn't hang around and trade inside. I think if this is going to work, it's just going to continue to move right up. You're going to have a higher high and higher lows, probably next 4 or 5 candles. That's what I would like to see in this. And if we could see that tomorrow, that would be my go ahead to get into this. And that you won't, or might go ahead to get out if we don't accomplish that. If we get in it early, expecting it, but go out far enough that we're not getting hit by time decay, and we see it doesn't really make that higher high, then you could get out with a little loss, I think. Anyway, so I have that written down for possible trade. IBM, I'm in. It did pop and then drop, and then it's just been chopping around. I expected this one to rotate back up. It started to do that last Thursday, but then get hit with the tech collapse. It seems to be riding a small trend line underneath us and a small retracement trend line. X marks the spot. Needs to hold this level. It needs to hold this level now. So we'll see what happens with that. Not the Altria. Actually, I'm more and more bullish on this one. This was a multiple divergence setup. This was a great divergence here. Pushed up, held that divergence, and actually made a nice double bottom divergence if you won't even want to stretch it that far. Pop back up, gap down. Now, big reversal candle on Friday. A lot of money going into the safety stocks like consumer defensive stocks, Procter & Gamble, Kellogg, and also Altria on dividend-paying stocks. So this was very bullish, and I'm liking this base more and more. I'm liking the base more and more. I like the higher low on this, even though it's not having a hard time on a higher low, but it could be a mid. You have an argument for what I call a closing divergence, where the price closes there, and the price closes underneath it, but it's a higher low, so it's a kind of a closing price divergence, and I like that a lot. So I think this candle is big. I think we move up, and we start to rally out here on Altria. I do have options on that going on, I believe, to September. PKG. I'm just looking at this. I'm looking at it as I have it written down here. It's going to be just something, I write on a piece of paper, check it every day, see how things are acting out. But this is starting to pattern out. I call it pattering. It's starting to pattern out. Pivot there, pivot there, pivot there, pivot there. You have a lower pivot line right here underneath the 200 period moving average, probably a low over here. It's starting to look interesting down here if we actually get a bounce off the lower line. That could be an HPS setup. Also has the possibility of actually turning back up here and getting to be a divergence. So there is a good level underneath us. I would watch it each day until it pops. And I'll actually probably circle that one and take care of that one when it comes here. SWK, remember the last time we looked at it was a divergence here. This was basically called the bottom on this. It continues to move higher. And we got out of all the rest of the stock here on this gap up. And it pulled back, held the 20 period moving average, and continued. It looks like it wants to go. I mean, this was a nice falling wedge pattern divergence. Low, lower low, low, higher low. Little divergence signal here, 9.3. So if you don't see it visually, this will give you a mathematical divergence. So that's good. It's passed. It was the best bet a couple weeks ago. I'm sure everyone wants an update on Veru. Veru, our penny, called our speculative stock that I have a big position in, and nothing really to report on it other than earnings are getting closer. We don't, I'd rather see news before it. The more and more I consider this price level, everyone should be close to having a profit on this if you got in originally when we got in, and then people got in maybe a little bit higher, but most people are around this level. I would caution anybody going forward that earnings are always, again, they could come out if they haven't finished their phase 2 trials, or they're being delayed for some reason. They're burning cash, and they're going to need cash. Even though if they're selling their female condoms, if they're not getting their contract, they're going to have to take some other type of funding emergency process. Probably doing a secondary, and that might affect the price. Not to say that the whole everything's going to work out for the best, I think, down the road. But when you get around to earnings and a stock like this that's waiting for results, you could get out now, call it a day, be safe. All right, holding into earnings or holding into, they're pretty comfortable. They're going to have good results. So it's about timing on that. Do you want to get out, take a shot that it gaps down on some kind of news saying they're going to do a secondary? If that even happens, they might come out and say that we have our news out during the earnings. It's a big what if. I'm committed to the stock. I believe in the story. I believe in where my information's coming from. So I'm happy to be in it, but of course I would love to see it above $3 and take some of it off, because I do have a an okay position in it. So I would love to be able to get a pop on this and scale out a little with a nice profit. We have a nice profit. Remember, we started getting our entry on this back in early spring at 135 area, and now it's 205, 202. That's you know, it's a home run in any way you look at it. So what we got in. Anyway, you know, that's what we're waiting for, news. So just a little update on that, and I wouldn't blame you if you wanted to take profits before any news comes out, because it's up in the air right now. We went over to JBHT. All right, so I did a lot of scans. From what I'm seeing on the overall, you know, look at a few hundred stocks overview, a lot of stocks, other than, you know, the ones that got hit and really affected the market, were basically the heavily weighted stocks that affect the market. You know, we knew that if Facebook or Twitter or any Google or any of those big, Apple, get hit, they're going to affect the market. But there's a lot of other stocks out there that I feel like the market here will bounce back quickly. I mean, the damage is done on Facebook, I think. I mean, that Facebook really got crushed. I mean, all these things could actually, you know, they could head down further, and I wouldn't you know, I wouldn't put that past Facebook. I mean, I don't have no belief in it. As a, you know, I just think it's the next, when the next best thing comes around, Facebook's going to be left out in the cold, just like Friendster is. They have Instagram, right? They have some other things that they're working on, but apparently, you know, just there's too much out there now. So I would be careful on Facebook, other than for day trades. I don't believe in the long-term story. I do believe it will move a lot, and if you're able to get on the right side of the trade, you can. But, you know, these are the stocks that move the market. You have, you know, the higher weighted stocks. So if these start to stabilize, head back up for whatever reason, you know, I think that's going to be bullish for the overall market. If we look back at the SPX one more time, I mean, we're way above that 20-period moving average. We are very bullish the way we are right now. I mean, I'm going to go on a limb saying I think we go higher, except if there's any politically, you know, news that kind of snowballs, you know, one thing leads into another thing. But the economy is supposed to be rip-roaring. You know, trade issues are kind of clearing up a bit in the EU. The big tech stocks, yeah, they're putting a speed bump in there, and we'll see get through. I think we're going to get through that and move higher. So that's really the first part of the HPS watch list. I want to get those stocks out to add to your own research. Right now, I do like that FSLR as a divergence setup. I have that circled. The PKG is a lower trend line. Altria is one of my best bets. So any three of these could end up on the list. I want to be in the office all day tomorrow, continuing to work on charts and get those charts out to you. But I want to get this out. Also, the Coop, I think Coop moves higher. We'll see, though. And that's it. And JBHT, oh yeah, that's a nice one too. So I have 1, 2, 3, 4 stocks, and we might see new charts on by tomorrow. I'll be back in here tomorrow working on that and starting the futures off for you. So if you're around later in the evening, you know, of course, Sundays when we start futures at Day Trading Radio, I'll be updating the HPS watch list with the stocks that made it, but we've already gone through them. That was my main issue today, is to kind of get it out there before Sunday so you have time to do your own research. If people are getting this, it's because I'm for free on any source or anything. I'm doing it probably on purpose because my first day back from vacation, and I'm going to use the second part of the video to update the HPS charts. But please come over, become a member of Day Trading Radio if you want to get all those setups sent to you and get access to our trading rooms, our dashboard, our trade alerts, and everything that comes with being a member. So stop by www.daytradingradio.com, and I'll see everyone in the markets. And then for the members, I'll update these charts tomorrow on your HPS watch list, and probably you know, to follow up with a secondary video.